Hello, hello, hello. This is Jeff Bushman, and this is Speaking of Everything with Jeff Bushman. That's me, and as it happens, of course, uh, that's pretty fortunate considering the name of the program. We've been doing podcasts with that name, and I'm sorry, the phone is ringing. We're going to decline it, and we're going to start all over. Anyway, no, actually, we're not going to start all over. We don't edit, and we just proved why it's a good idea to do so, but we're going to turn off the sound. Okay, so anyway, this is the first video episode of Speaking of Everything with Jeff Bushman, that said. We've been doing podcasts with that name, which, if you put in the whole name, are available wherever you get your podcasts, and specifically at our network site, which is tjbsradio.com. We also have other shows on that channel, and at our podcast site, including a nostalgic look at growing up in the LA area of the 1960s, and one that's new that actually isn't recorded yet, but will be perhaps as early as this evening, about losing weight through just some healthy eating practices. And there's also a podcast about fantasy romance novels. I don't do that one. With today's video, which will also be available as a recorded audio podcast, we venture into, of course, the video format. While we would like this to be a success, I wanted to let you know that unless you're kind of a policy wonk or interested specifically in tax and government economic policy, this particular one might be boring for you. Please come back anyway, as in the near future, we're planning on setting up some guests, including authors, scientists, and others like those we interviewed on one of our earlier series. And if you're thinking that you may have heard our earlier series, you could be right. We used to do a program on goingbeyondradio.com until that one closed down. And we have also done some podcasts on blogtalkradio.com. So if my name sounds familiar and you don't know me, that could be why. One of the things the thing we're going to be talking about tonight, principally, is changing our taxing methodology, that is our country's taxing methodology, from an income tax to a sales tax. And before you turn off immediately, I will tell you that there are some ideas I'm going to present in this episode that are a little different from what you may have heard from the advocates of a so-called fair tax. Of course, this whole thing may be a little bit, what's the word I'm looking for? Totally dull to anyone outside the United States, not to mention people who are in the United States. So anyway, all that being said, we're going to continue as soon as I can close this thing on our screen. There we go. And one of the things you may notice during the course of this video, if you are in fact watching a video, and I might also add for those who are listening to audio, you can, audio only, that besides being able to access the Google Live presentation, you'll also be able to see this recorded video after we have done the program, I think by probably an hour or two. In any event, let's talk about the taxes in a minute, but I wanted to talk for a minute about a policy that, while I generally agree, for example, with President Biden in terms of some of the programs that he's trying to undertake, although I am a little concerned about the spending, not in terms of the individual programs, but the overall effect, which I'll explain in just a minute. I'm specifically concerned about the tax the rich idea. I'm not rich. I don't have a dog in this game. But what's that expression? The dog in this race? I'm not sure. Anyway, forgive the lack of knowledge on cliches. But when we're first off, in terms of talking about the spending, the first program, the American Rescue Plan, perfect. Something like $2 trillion into the economy. Not only a good idea, but better than the tax cut, much better than the tax cut that the Republicans and Trump did, because number one, at the time, it was not necessary for the economy. Number two, because that went into the hands principally of the well-off, it didn't really have the economic benefit attached to it. The American Rescue Plan, while it's still in its early days, incidentally, this is recorded on April the 30th, 2021, while it's still in its early days of any effect on the economy, it will, in all likelihood, have a beneficial effect. Actually, already has. People even before they got their checks, but certainly after, have been spending money. There's been more money spent in the economy, and more money being spent in the economy normally leads to more jobs. Because if I go buy a widget, the widget manufacturer, if enough people do that, the widget manufacturer is going to have to hire more people to build more widgets. And the effect of that is then the employees at the widget factory will have more money and so on. Most people are familiar with what's called the ripple effect, and that's it. But the idea of, oh, and I also agree that we need infrastructure improvements, both those that we normally think of as infrastructure and a lot of the stuff that's in the Biden infrastructure program. The problem is that we don't currently know all of the impact of the first plan, the American Rescue Plan, on the economy. And by going ahead and throwing more money into the economy with the infrastructure plan and now the additional plan about supporting families, all of which are great ideas and great causes. But the problem is by throwing that much money into the economy, I think we could end up having some serious inflation down the line. Right now, inflation is clearly not a problem. Yes, there are a few prices going up here and there, but most of it's in areas like gasoline. While that's very important to those of us who use gasoline a lot, and I'm one of those, um, it's still not affecting most areas of our economy. Okay. All right. But when you get all that money, the 1.9 trillion from the first plan, and I think there's an approximately same amount on the infrastructure program, at least as it's currently being offered, and then we do something similar to the American Rescue, we do something similar with the Families Act, you're really talking about something like $4 or $5 trillion into the economy. And while we can talk all day, but we won't, about how important that is to the people who receive that aid and for the society at large, it's still a bunch of money going into the economy. And that gets me to the point I was going to make where I disagree with part of the newest plan. The newest plan says to pay for daycare for people who have to work and have children. And we certainly need to help them in some way. There's no question about that. But to say, let's tax the rich, let's go ahead and increase taxes for those who earn over $400,000 a year. There may be some reasons that we should tax wealthy people more than we're doing now. And frankly, I think that's a good idea in a couple of areas. Anyway, regardless of program, I think we need to close loopholes that wealthy people can take advantage of. And we need to increase capital gains so that the taxes you pay on capital gains are the same that somebody else pays for just income at a job. So let's assume, and we have a so-called progressive income tax, which means not only do you pay more taxes as you are doing better in terms of your income, pardon me, but you are paying a higher percentage of your income. And there's good reasons for that. That's why it was set up at the beginning of the 20th century like that. It was set up by people like Woodrow Wilson and Teddy Roosevelt and all those folks who wanted to create a situation that was creating less of a wealth gap, which we now have again. And one of the ways to do that is make the whatever tax we're talking about truly more progressive. And to give you an example of that, and I'll talk about it again when we're talking about sales tax versus income tax. But if you're talking about an income tax where, for example, if I earn the median income in America, $50,000, okay, and assuming for the moment there are no deductions, which we'll do on the same pattern for the higher earners, the $50,000 of income, if I'm paying 20%, I'm going to pay $10,000 in income taxes. Then I have $40,000 to spend on rent or other housing expenses, food for my family, all kinds of other gasoline that we talked about before, all kinds of other expenses. That's not very much, obviously. On the other hand, if I'm earning $100,000, right? Let's change that. If I'm earning $1 million a year, and I'm paying that same, let's say I'm paying 40%. 40% of $1 million is 400,000. I still have $600,000 to spend. Okay, it's really not that major a sacrifice to be paying a doubled income tax rate from the poor schmuck who's only getting $50,000 a year. That's progressive, it's fair, and progressive doesn't mean liberal in that context. It means the more you earn, the more you pay, and the higher rate you pay. And that's a way of, to some small extent, equalizing Americans. Now, we don't want all Americans to be equal. We want all Americans to have equal opportunity. But that does create more opportunity because, again, more money is coming into the government so we can have less of a deficit and so we can keep rates low for the small earners. Again, you can disagree with that concept, but that's the focus of our income tax structure. Okay. All right. So, but when we get to talking about what I started to talk about, which was the daycare assistance and the idea of only taxing the better off or the higher earners, I think that's a mistake. I think if we agree that something is a societal good, whatever it is, we should all pay for it. We should pay for it out of the general fund. We should pay for it out of income taxes raised. And if you have a progressive taxing system, the wealthy will still pay significantly more, and that's appropriate. But we should all contribute to something that benefits all of us. And paying for daycare does benefit all of us, even if you have no children or grandchildren. Because if mom, because typically it's mom who tends to spend more time and effort on raising children. I'm sorry, I wish that weren't the case, but it is. Because of that, if mom can go back into the workplace, it benefits all of society. I have a friend who would disagree with that heartily, who thinks women belong in the home. I'm not kidding. He's in his 80s, but he strongly believes that and thinks that women in the workplace is the primary reason we have more divorces. Go figure. All right, but anyway, we should all contribute because what's fair is fair. Now, again, keeping with that idea of fairness, the wealthy should and would pay more. But again, we should all contribute something. Okay, my slight disagreement. But the other thing here is we need to talk about what's wrong with income taxes so we can talk about how we can improve that situation with taking away entirely the federal income tax and replacing it with a federal sales tax. Now, my judgment on how much such a sales tax would be is based on studies other people have done. I've not studied that myself. When I was in college, or as they say in England and Canada, and probably Australia and New Zealand, when I was at university, I minored in econ and macro, by the way, not micro. And when you talk to people about creating a federal income tax, a federal sales tax, they go, oh, I don't want to start paying all these taxes on purchases I make. But what it ignores is the fact you would eliminate the federal income tax. So you would still pay for Medicare and Social Security, as would your employer if you have an employer. But you wouldn't pay income tax, so the IRS would not be involved. But let's talk about things that are wrong with the income tax overall, and then talk about the benefits, I believe, of a federal sales tax. So first off, what's wrong with the federal income tax is a lot of people don't report all their income. They forget to mention something on the IRS form. Now, this is particularly true of the self-employed and people who are in cash businesses, like cab drivers, drug dealers, we'll get to that in a minute, sex workers. All of these folks either don't report income at all in the latter two cases, or don't report all their income. Not every self-employed person, I'm one of those, and I do report all my income, but not every self-employed person does report all their income. So income tax doesn't catch everything. And again, especially with illegal income, it doesn't catch that kind of income. There are also, if you are well off and you have a good accountant, then there are all kinds of deductions available that you can take that you therefore don't pay tax. What ends up happening, Warren Buffett, the expert investor, has said that the effective rate, that is the ultimate percentage of his total income that he ends up paying in taxes, is less, the rate, not the dollar amount. The rate he pays is less than the rate his secretary pays. Now, let's assume he pays his secretary well. Let's say she earns $70,000 a year. He earns millions a year. Maybe some year, maybe he earns $1 billion in some years. I doubt it, but whatever it is, he earns millions a year, and the rate he pays is less than his secretary pays. On paper, he should be paying a vastly higher percentage. He should be paying the top rate, whatever that is. But he pays less than his secretary pays because he's able to take all of those deductions. Let me give you a simple example. And this is not regarding Buffett. This is regarding people who are self-employed who work at least partially out of their home. I pay an electric bill every month. Being self-employed, because I have a home office, which is where I'm broadcasting from, I can go ahead and deduct a portion of my electric bill, a portion of my natural gas bill if I had one, all of those, water. I can deduct all of those things, or parts of all of those things, which someone who is employed at a regular job cannot do under normal circumstances. So as a result of that, and frankly, I'm far from wealthy and certainly far from Buffett's category, but I still get to take things that the person who's working at a job doesn't get to take. That's not fair. And if we went ahead and went to a sales tax instead of an income tax, that would change. Okay. The other thing is, with regard to our current income tax system, it's cumbersome both for individuals and employers. Employers have to file quarterly reports, obviously every 3 months. Some people who are in business for themselves have to file estimates during the year. And quite frankly, when it comes to income taxes, again, I'm not well off by American standards, but I have to, as a practical matter, I have to hire somebody to do my income taxes. One, I'm inept at that sort of thing, and two, I have enough complications in the situation because of my business history that I need somebody who knows what they're doing. And fortunately, my accountant does. My accountant, the guy who I pay once a year to do my taxes, very bright guy, very good at what he does, but he also costs me a few $100 every year. And we should not have a self-reporting system that ends up costing people money to pay someone to prepare. I have nothing against my accountant or accountants generally. My dad was an accountant, but I don't think we should have to pay people to just pay the government what we owe them. Okay, so it's cumbersome and clunky. Now, a lot of people have suggested it would be simply better to go ahead and create a flat tax, which is, in my judgment and that of many others, a horrible idea. And I will tell you why as I take a drink. A flat tax, let's use a number that a lot of people have used to discuss the flat tax, although I think it's unreasonably small. But let's say that's accurate. 10%. Everybody pays 10% on their income. You can relax. It's just vodka. I'm kidding. It's tea. But anyway, if someone, that same example, 10% on income tax on income, okay, the $50,000 a year earner pays $5,000, $45,000. Better than the income tax rate of 20%, but still not left with very much money in today's society to take care of rent, mortgage, food, gasoline, clothing, all those other things that all of us have to pay for. Not very much money in a year to take care of that, particularly if you're living in an expensive area. The well-off person who's earning $1 million a year paying 10% is only paying $100,000. He's still got $900,000 left. He's not contributing what some people call his or her fair share. Okay, and I think we would all agree that with the earnings being greater, you should pay a higher rate. And it's not reasonable to expect that someone who has obviously benefited from society and has benefited society too, let's be fair, should only pay that same rate that an individual pays who is earning only $50,000 a year. Okay. But again, if we eliminate the income tax, let's look at what we get instead. And by the way, I'm aware of the fact that a lot of people have said that the idea of a federal sales tax, national sales tax, instead of an income tax, is regressive. What they mean by regressive is that people who earn very little are going to be paying a higher percentage of their income because of the way the taxes are computed. And we have a way of overcoming the regressivity of a straight sales tax. And we'll talk about that in a minute. But the flat tax is clearly regressive because the percentage is the same uniformly, but the individual who isn't making very much money gets really badly hurt by that. Even now, with what we have, the individual who is earning very little may end up paying no tax, or in fact getting through the earned income tax credit, may end up getting money from the government. But the flat tax would eliminate all that. And it would also eliminate all deductions. That's the fair part. Okay. If you're a $50,000 a year earner, you're getting about 20% of your income deducted for sales tax. Okay. And again, if you eliminate the federal income tax, you are now getting back an extra $10,000. So now, instead of having only $40,000 a year to spend on all of your needs and your family's needs, you have $50,000. That's a decent raise. Now, you're going to be very unlikely to spend that much on sales tax. Why? Let's assume you have a 20% sales tax across the board: goods, services, rent, mortgage, everything except for the things I'm going to mention in a few minutes. And that would only be for, well, you'll understand more in a minute. But in order for you to spend that 20%, you'd have to spend all $50,000. Now, you might do that, but it's unlikely that you're going to spend $50,000 in a year, where before you were spending $40,000, and you're going to spend it all on non-exempt items. Okay. Again, that becomes a little clearer in a minute. But if I'm that person who's earning $50,000 a year, and I've been accustomed to only getting $40,000 because of the income tax, now I've got $50,000. I just got a raise. And now I'm going to go to the store. I'm going to go pay my rent, all those things. But I'm still going to end up with more money than I did before, all other things being equal. The wealthy person, okay, is someone who's going to get, again, using my numbers from before, $1 million a year. Okay. With that $1 million a year and 20% and let's assume for the moment they were having 40% taken out for income taxes, which is a high amount in this country now. 40%, the 40% that she or he is paying comes out to $400,000. Now they just got a $400,000 a year raise. Not bad, but by eliminating the income tax. So, but again, even before, sure, he was keeping $600,000 a year. Okay. First off, probably not spending all that, but even if they did, they still are doing very well. So let's assume that they only spend what they were spending before. Even though they've got $1 million, they're only spending $600,000. By spending $600,000 and spending it all, okay, they're at 20%. That's going to be $120,000 in taxes they're going to pay. That's a lot of money by any measure. $120,000 they're going to pay out of the $400,000 that they got by not paying income tax. Okay, so they're still ahead with the sales tax, and the small earner is ahead, although admittedly less for obvious reasons. But the big earner is now going to be, instead of getting $600,000 that they get to keep, spend, save, invest, whatever they want, they now have, by spending the full $600,000 plus $120,000 in taxes, right? Okay, that $600,000 is theirs to spend, but they still have, with the deduction of that 120 from the 400,000 that they were previously taxed, they still have an extra $280,000. Not bad. They, again, by putting that in banks, by investing it, they are benefiting the society. No deductions, okay? And again, it's fair across the board. And we mentioned before that this can be somewhat regressive. Let me tell you two ways that it doesn't hurt the low earner as badly as a straight federal sales tax alone. Again, you're paying a lot more in sales tax. Right now, you're only paying state, city, county sales tax in some places, but there's no federal sales tax. This would impose the federal sales tax, obviously, but completely eliminate income tax. Okay. All right. So that being said, if the person who's only earning $50,000 has to pay rent, let me try that again, has to pay sales tax on their rent or their mortgage, that could be pretty painful with a 20% tax rate. Likewise, food. So here's the idea. For the rent exemption, okay, there's two exemptions, rent and some kinds of food, but not all. So if you go spend money in the marketplace, not just the supermarket, but overall, what needs to happen is there needs to be a determination of what the average rent is in your area, okay? And there are several ways of computing averages. What my inclination would be, although economists and policymakers may have a better idea, but my inclination would be to say, okay, let's find out. Let's say you live in Philadelphia, just to pick a city out of the hat. That half the people in Philadelphia pay more than $800 a month for a 2-bedroom, and half the people in Philadelphia pay less than $800 a month. I'm not saying that's the average rent or mortgage payment, because those who pay a lot of money in a payment for rent or mortgage, which is their choice, those folks are going to skew an average if we just take what everybody's paying in total rent or mortgage payments in Philadelphia and then divide it among all the people who are paying. That will skew the average upwards. We don't need to do that. Just take a number that is equivalent to what half of the people in town are paying less than, and half the people in town are paying more than. Doesn't matter exactly how much it is. But let's assume that number, I think I said $1,000. Let's keep with that, paying $1,000. In that case, if you are one of those people who's paying $1,000 or less in your rent payment would be exempt from the federal sales tax. Okay. And the way that's done in the sales tax, we didn't talk about how those taxes are collected. We'll do that in a minute. But in essence, for rent or mortgage payments, your landlord or your lender will be paying the IRS. You will not interact with the IRS unless you happen to run a business where you're collecting money from individual customers or companies. I'll give you some examples of that in a minute. But for that rental payment, that is the median rent in terms of who's paying how much in each community. Obviously, in Los Angeles, Washington, D.C., San Francisco, New York City, the median rental payment, that is the amount that's being is right in the middle of what people are paying, is going to be much higher. Okay, a 2-bedroom apartment in L.A., for example, I think is somewhere around $2,000 to $2,500. I don't know what that number is. So if you're paying that amount or less in your rent is exempt from the tax. You don't have to pay it. Your landlord doesn't have to collect it to send to the IRS. Done. Okay. If you're paying more than that median amount, again, the amount that half are paying more than, half are paying less than. If you're in the half that's paying more than your $1,000 in my earlier example, then you're going to pay your 20% on all of that rent. Again, assuming the federal sales tax rate is 20%. Why? Well, it does a couple of things. First off, again, it collects more taxes than are currently being collected if you only charge for retail products. And in a lot of places, services are not taxed at all in terms of sales tax. So if that's the case, again, more money is being collected and paid. But the advantage is besides that, is it will tend to keep rents down a little bit. Here's why. If you're a landlord and you're contemplating charging, let's say, for example, today, the median amount that we talked about is $1,000. You were thinking about raising the rent to $1,100. Now, for someone who's paying $1,000, you're raising the rent much more than $100 a month. Why? Because the $1,000 a month, and this, by the way, can be adjusted annually by the local authorities or by the federal government, based on what the numbers are. But if you're thinking of charging $1,100, instead of someone paying you $1,000 and no tax, you're now charging $1,100 plus 20% of that $1,100, which is another $220. So now you're raising the rent from $1,000, effective rent for the individual, from $1,000 to $1,320. Okay, lots of landlords aren't going to want to do that because the landlord down the street is probably still only charging the $1,000. And if I'm a tenant in that building, unless it's going to cost me a lot of money to move, I'm going to go to the landlord down the street who's not raising that rent. Now, theoretically, that's always true in a market economy. But having been a landlord in the past, I can tell you, if I raise the rent 10% in a year, right, 10% a month rather, what happens is most people will make the calculation, okay, I'm going to be paying an extra $100 a month, and that would be $1,200 a year, and it's going to cost me $1,200 or more to move, I'll stay. But where that rent effectively from the median amount to the slightly higher amount is going to get into taxable area, I'm raising the rent enough that tenants are going to consider moving more eagerly. Some will, some won't, but there's a disincentive to raise the rent. As far as I'm concerned, that's a good thing. Likewise, the landlord who's charging more money, I shouldn't say likewise, I should say contrary-wise, the landlord who's charging more money to the wealthier tenant is not going to hesitate as much, because if she or he raises the rent, again, pick a number, $200, they're already paying taxes on the first amount. Let's say, for example, they're paying $2,000 a month to start with. Paying $2,000 a month, now they're going to raise it to $2,200. Well, on $2,000, 20% is, if I did my math right, is going to be $400. Now they're going to raise to $2,200. Now it's $2,240, I think. Yeah. So that increase is not that great. So it's more likely to go up at the top end and stay stable at the lower end. So if you're one of those folks, now again, I'm not saying the first, whatever the median amount is, again, saying $1,000, that the first $1,000 is always exempt. No, only if the rent is, or mortgage payment is below whatever that amount is that we talked about before, half paying more, half paying less in that community. So that, again, would be a disincentive about raising the rent, and would also be a way to more progressivize the federal sales tax, because those who are paying less because they're earning less are going to be paying less or have that tax exempt rent payment, where everybody who's higher is going to be paying more. The other thing that should be exempt, in my judgment, but again, who knows what somebody would pass, if anything passes that changes anything, would be to exempt certain foods, but not all. Someone said the other day that Biden wants to control how much meat you eat. There is an 8-letter word that one would think of in response. It starts with B, ends with T, and has an S and an H in the middle, okay? And it's nonsense. Biden never said anything like that. There's none of his programs that talk about that. While we might all think, or some of us might think, that would be a great thing, not to limit you, but that more people should eat less meat. It's not in any of the plans, so forget about it. But if we can exempt from the sales tax those foods which are healthier, and rather than getting into a debate about whether rice is healthier than meat or milk or any of that stuff, forget about that. I have opinions on that, but nobody cares. Instead, why not talk about the just exempt food, and why not just exempt fruits and vegetables, for example? Okay. By the way, I had mentioned earlier in this YouTube live situation that we would also be having a podcast. We will, but I have to knock it down from the audio on YouTube because I forgot to hit record when we started the Zoom presentation. So that'll be a little later. But anyway, so that's basically what you're talking about. And that is exempt fruits and vegetables, because I think everybody agrees that fruits and vegetables are healthy. Although, frankly, I hate kale, and you might too. But other fruits and vegetables are fine for me, or most of them anyway. So let's exempt that. So all the fruits and vegetables that you buy fresh, maybe we'll say frozen too, are exempt from the sales tax. No problem. Now, how does the government collect the tax? Okay. You would, if you're not self-employed, or you're self-employed but you're not collecting money from the public, right? The only people who would pay tax to the government, well, everybody would pay, but the only ones who would collect it and send it to the government are those who are charging other people money for their goods or services. So I'm in a business. My typical charge of somebody would, let's say, be $65. Okay. This is not an ad. I'll give an ad later, but not for that business. Um, $65. If I had to collect it from you, instead of charging you 65, I would charge you 65 plus 20%, $13. So I would charge you $78. Of that, once a week, once a month, I would take $13 out of every $65, out of every service, every thing I offered you at $65 each. I would take $13, which is the tax you're paying on that 65, and I would send it to the IRS. I could fill out my tax form on a postcard, right? Here's how much I collected. Here's how much I owe you. Check attached. Boom, done. Or maybe Google Pay or Venmo, whatever it is. Boom, done. And again, very many fewer people would actually be sending taxes to the government. But the advantages are that it'll be very quick. You can use my social security number if I'm that person, or employer ID, doesn't matter. The government gets the money to which they're entitled. And will there be cheats? Of course there will be. But there, with the relatively fewer people paying, there'd be a lot fewer audits that the IRS could conduct, which they could do with a much smaller staff. Likewise, in terms of processing the taxes, there will be no tax refunds. We could argue that there may be a good idea to continue earned income tax credit, different subject, but there will be no income tax refunds, so the IRS doesn't have to process any of those. You and most other people, I shouldn't say you. The reason I said that initially is I was starting to say you and I, but I'm in a different position. But if you don't sell stuff, goods or services, anybody who doesn't do that, all I do is I work at a job. If I work at a job, I don't have to send any tax money. I don't have to fill out any returns. I don't have to, or any other forms for the government. Only my employer who sells the stuff that I produce has to pay taxes. And that's based on the tax that his or her customers will pay as part of what she or he charges. Okay, done. Very simple. And again, they could send their taxes into the government either weekly or monthly, whatever turns out to be the best choice. And if it's too cumbersome for the government to process all those, no problem. Instead of that, the government can establish a depository. For example, a bank. Here in this area where I live, we pay our personal property taxes once or twice a year. We can pay the full year at a time if we want to, or we can pay it in 2 installments. And when I pay it, I go to Chase Bank. Typically, I don't actually go there, but I could go to Chase Bank, give them my slip with the tax amount on it, pay it. They take care of everything else because they've been designated by the local taxing authority. Well, the federal government can do the same thing. 1 year they can use Bank of America, the next year they use Chase, the third year, whoever. They spread that around, and maybe they make them they pay them a little money for the processing of that. That's it. The other advantage, which I alluded to earlier but didn't talk about a lot, is people with illegal incomes. We don't recognize incomes for, a few examples come to mind. One, sex workers. They were top of mind for some reason. No, just kidding. Sex workers, drug dealers. In some states, I guess in all states, since marijuana is still a federally controlled substance, even though it's legal in like 30 some odd states, they can't get credit card privileges because it's still illegal under federal law and banks are federally chartered. Okay, fine. So what will happen is the same thing. You buy, I frankly don't know what marijuana prices are, but let's assume they're $50 an ounce for sake of figuring. Now you charge 50 plus the 20%, which is another $10. Now you're paying 60. They take $10 out of every sale of 1 ounce. And again, they put it in a bank depository. They don't need credit cards or anything like that. That's separate and apart. I think that rule is dumb by itself. But in this context, they make their deposits to the same bank. You get it that way. Right now, without the ability to do that kind of banking, there theoretically could be some cheating there. I'm not saying they are doing that, but I am saying that, again, the IRS could audit, so people will tend to be honest. And IRS can audit much more vigorously because they're not auditing individuals. They're only checking on businesses. Okay, so all of those illegal income people, again, the sex workers and the dope dealers, they may not report their income, but they still buy things. Okay, they buy gasoline, they pay rent, they pay mortgage payments, they pay for gasoline, if I didn't mention that yet, groceries, and now they would be paying some of that money to the federal government in the form of a sales tax. I'm having trouble understanding what could possibly be wrong with that. Okay. By the way, the flat tax wouldn't capture that either. Okay. Also, someone visiting our country, um, they would be paying local sales taxes right now. But if all of their income is earned elsewhere, the only way that the American federal government would get some of that money is by a federal sales tax. We would capture money from foreign visitors too. I believe, though I don't know this absolutely, I am almost certain that this country has more visitors from foreign countries than any other country in the world, for understandable reasons. And people want to tour slums. I'm joking. Obviously, they come here for all the stuff that our country has. And by charging a federal sales tax, we are lessening the burden on our own citizens. Okay. And I mentioned the 10% tax. By the way, I am looking at notes that I wrote for this. The federal sales tax would be less because of the non-payment of taxes. And we already covered all of that. Okay. Bear with me 1 second, see if we haven't covered anything else. Oh, another thing that would happen because people who are better off obviously spend more money, but they may not spend as high a percentage of their income as poor people do. And I'll talk about tax cuts and their effect in that relationship. When the Trump tax cut went in, okay, what happened was, obviously it went generally to more wealthy people. You can talk about whether that's good or bad. I think it's bad. You may think it's good. That's fine. But realistically, well-off people spend a lower percentage of their income. What do they do with their income? Well, they put it in a bank. They put it in investments. Nothing wrong with that, but it doesn't go much into the economy. If I go ahead and buy 10 shares of Exxon, okay, Exxon doesn't go spend that money. They keep it in their treasury because they have to in case they need to go ahead and redeem that stock for whatever reason. That's not normally how it works, but they keep it as money in the company. Again, that's not necessarily a bad thing, but it's not very good for the economy at large. People who are earning $50,000, $60,000, $70,000 a year, or maybe $40,000 a year, when they get money from the government, as they did with both the recent payments from the Biden American Rescue Plan or one of Trump's earlier deals and George W. Bush's deal, where he sent checks to individuals. That money tends to go right into the economy because I pay a bill that I have that's been due. I may go buy a phone. I may go do this, that, or the other thing. Those things create jobs. Those are good for the economy. So people who have less money are more likely to spend whatever they get, whereas well-off people have a tendency to save more. Okay. By the way, during the COVID crisis, that to some degree changed. The savings rate in the United States is among the lowest in the world. But during COVID, when we didn't have much to spend money on, we saved as a country, as a population, we saved more money. But let's say a well-off person goes and spends, I don't know, $1 million, $2 million on a yacht. Well, guess what, folks? That I'm not talking about the $1 million a year earner, although that's possible, because the $1 million a year earner, let's change the picture a little bit. Let's say you earn $100,000 a year. You may go buy a house that costs $500,000 or $300,000. That's more than you earn a year, but that's cool because you're going to pay it over 30. But when you buy that house, the seller is going to get the full value of the house from your loan, from your mortgage loan, along with a 20% payment that becomes part of your mortgage. And the lender or the seller is going to take, again, assuming you're buying a $500,000 house, okay, 20% of that is going to be $100,000. So instead of $500,000, you're paying out $600,000, again, over 30 years plus interest. But the full 100,000 is going to the feds. Okay, again, lowering the tax requirements on lower earners, but also possibly reducing or eliminating deficits over time. Okay, um, so when someone goes and buys a yacht, let's use another figure, 10 million. Okay, I don't know if that's absurd or not, but I've never bought a yacht. I've never even bought a boat. Um, the only boat ride I think I ever bought was a trip to Catalina from LA. But anyway, um, the $10 million yacht, again, that well-off person is not going to pay for that all at once, but the bank will. And the $10 million yacht is going to be $500,000 tax event. That is $500,000 more is going to go into the US Treasury. Okay, that's the idea behind it. You may not like it, you may not agree with it, that's okay. But if you have an opportunity to talk to your representative in Congress, by which I mean your House member or your senator, please do and talk to them about a federal sales tax and eliminating the income tax. Write a letter. It doesn't hurt and may help. The current system is absurd. One other thing that it would change, and then I'm going to get off the soapbox. Currently, the U.S. government is most state governments, but let's just talk about the U.S. federal government. The U.S. government is inherently corrupt. Why? Not because the people are corrupt. Some are, most aren't. But if I am a member of the House of Representatives, and by the way, we should call them representatives, not congressmen and congresswomen. It gets real clunky. Representatives in the House or a senator in the Senate. I depend on campaign contributions. And except for a weird occurrence like a Bernie Sanders, or to some degree, Biden and Obama before him, but Biden less so. Most of the contributions that come into a campaign are from big contributors, the AT&Ts, the General Motors, the Exxons. Okay. The reality is that even if I don't intend to, I am going to unconsciously perhaps shade my votes or make my votes in the House or the Senate based on whose contributions I'm getting. Okay, most contributors, what they really want from the House members and senators to whom they're making the contributions is a tax break. I don't want to have to pay taxes on oil I take out of the ground. In fact, I want a depletion allowance. I want you to subsidize, which is what's going on, by the way. I want you to subsidize my drilling. I want you to subsidize my extraction. And you can argue that's a good idea or a bad idea. That's not our subject. What is our subject is that large companies, large entities want to get advantaged treatment, and they go to Congress, by which I include the House and the Senate. They go to Congress to try to get those benefits. If you have a federal sales tax that applies to all things with the exemptions I mentioned, there is no advantage to be gained by going to Congress and giving the members of the House and the Senate contributions, because there's no tax break you can get. Okay, so it would to some extent lessen the corruption, not eliminate, but it would lessen the corruption. Okay, so the sales tax instead of the income tax puts more money in people's pockets to do with it what they choose, because on some purchases, if you're earning good money, you get to choose whether you're going to spend money on something or not. Do I buy a new car for $30,000 or a used car for $8,000? Well, part of that choice may be the 20% sales tax I'm going to pay. Even though I have more money in my pocket, that difference may be enough to make that decision in one direction or the other. Or I may make the choice to spend more money because I want the newer car, but I have to be willing to pay those taxes. Also, by making the exemptions we did, it's less regressive than it would otherwise be. And by eliminating deductions, we are saving people a lot of money on tax preparers, and we are making it more fair because wealthy people don't get to deduct. Okay, last thing. If you liked this video, please tune in again, subscribe, so you can be notified when we do the next one. This is Speaking of Everything with Jeff Bushman. We also will have available Be Healthy, Lose Weight, and Fairfax, along with Fantasy Time. Fantasy Time is the podcast and will be a video done by Fallon and Paris about romance fantasy novels. Maybe it's fantasy romance novels. I honestly don't know, but it's one or the other. And you can always pick up our podcast, our audio podcast at tjbsradio.com. If you heard our presentation at the beginning and are still hearing it now, you know my voice is almost gone. So I'll stop here and shut up and let you go. Thanks very much. Oh, one last thing. If you have lost contact with an old friend and want to contact that person, there's a service that is reasonably priced. And if they're unsuccessful, you'll get a partial refund. It's called Find Lost Friends, findlostfriends.com. I recommend it to you highly, partly for selfish reasons. Okay, thanks very much. Good night, and please be kind to each other.